Hi there guys, hope you're okay. So I wanted to do a video journal of a trade that happened on Friday afternoon in the Dow. We had just had non-farm payroll. I've actually used the bar select to pull this back in time. We had just had non-farm payroll. We can see the spike there. Now, if I go up to the higher time frame, pull this in. So I'd already marked up, we had some daily liquidity down here which hadn't quite been grabbed, but it wasn't far off of it. And if I come down a little bit lower, I've been marking out from quite a while ago now, from as long back as the middle of January. There was some daily imbalance here from the huge push up in the market that we had recently, well, back in January. So anyway, I had some daily liquidity that I'd marked here, which was one of the last daily lows. That still hasn't been taken at all this week. We had a few areas of higher level H4 liquidity, but more importantly, I had marked out this fib zone here just to get an idea. So this was obviously a couple of days ago. We haven't really broken it too far, but we weren't far off it. So this sell kill zone at the 50% was still in play here. We kind of went through it at non-farm, but obviously nothing really settled over it. So as far as I was concerned, the bearish sentiment that had been going on for the last week and a half or so was still in play here. We came back, grabbed some liquidity up here. It came down, obviously, for this daily liquidity. It bounced out of that. Probably not as much as I was hoping, to be honest. I mean, we're looking at 42,300 there, and even at non-farm, it only went to 42,800. So you'd expect a fairly decent bounce out of the daily liquidity, but it's been in there and bouncing around. And lo and behold, after non-farm, it started pushing back down with this long bar here. So this is up on the H1. So I was obviously trading at the 5M, looking for opportunities to sell potentially. So there's the sell kill zone that I'd already put into place. And obviously we had this big bullish bar out of the daily area. And if I move that on by one bar, we had another pull back at that point, which came in. So there was definitely still some battling going on. I mean, bearing in mind, this was 130 to 230 as I came onto the charts at the US Open. So we're having a little bit of battle. And then all of a sudden, the market spiked straight up into my sell kill zone, which also had this inverse fair value gap that was up here. It literally came up and tapped that. I then was looking at that and hoping that effectively the market would hold in that position. And lo and behold, another 5 minutes, I'm just sitting here watching this. The market seemed to be pausing at that point. I thought, well, it's a reasonable opportunity here. At the 42,700, it seems to be hitting this sort of Asian liquidity that it had been having all the way across from here and here. Hadn't quite reached it at any other point in the day. Had now reached that Asian liquidity and into a large fair value gap and sell area. So I decided that I thought that would probably be the option to take the trade. But the question was, where would that trade potentially exit? So obviously there was an opportunity that it may only come down and fill up this fair value gap that was currently being created. It hadn't, I think that had settled at that point. There's a couple of other areas of note here. So if we look at this area here, we had this fair value gap that came down, but more importantly, in terms of actually understanding, this push up effectively inversed that fair value gap, and therefore it became a fairly strong buy area. And if I use the Lux algo thing, you can see here on the 5 minute, it created that fair value gap bar. So I also thought, okay, well, that's an opportunity that potentially it doesn't decide to fall through, and it actually reverses from, we get some bounce off of that. I also decided to take a fib retracement off of where the current high was back to where it was, and at that point I'd also marked out that my my buy fib area was going to be somewhere around here at the 42,580 mark. So in my mind, I'm sitting here thinking 42,580 or potentially just closing out that gap. We've had some strongish bounces from time to time, and if the market the numbers were actually bullish, so if the market decided it was going to go bullish, it may only reverse back to the 382. But I took my chance. I entered the trade at this point just up here. I think I managed to get 706, and we had another 5 minute, and lo and behold, we got this bull bar, this bear bar right here, and I actually got out as it was tipping this here. Now, a little bit frustratingly, I was quite happy with that trade, to be fair. It made me like 100 ticks. In fact, what I'd done is, as it broke here, I'd actually sold that again. So I had 2 trades in. I closed out the first trade pretty quickly, obviously, because it was closest. The other trade was still up here at 706. And then if I'd actually continued to hold it, it did pull back. The second trade I put on would have got stopped out for break even. The first trade would not have got stopped out. And actually, after that, the market busted straight through that, although you can see there it has bounced off of the inverse fair value gap, so we did get a bit of a reaction out of that, and then it continued to trade on lower and lower and actually picked up that daily liquidity. So I hope that is an opportunity to see why I took that trade. I certainly wish I'd held it, of course. It was a great entry, but the market just as easily could have reversed on me. But ultimately a good entry, a decent exit as far as I was concerned. Obviously, we could have all held it in the land of the blind. The one-eyed man is king. But it was a good trade, and I was happy.